CXMT, a memory chip maker based in Hefei, made a massive splash on the Shanghai stock market. Reporting across major outlets confirms its blockbuster public debut. The BBC highlights that the company's shares soared by nearly 470% during its opening drive, propelled largely by an ongoing boom in artificial intelligence that is driving global demand for memory chips. Meanwhile, CNBC reports that the listing raised roughly 57.92 billion yuan, or about $8.6 billion, after pricing its initial public offering at 8.66 yuan per share. This surge officially established CXMT as the most valuable company listed in China. The fallout from CXMT's explosive debut was felt instantly across global markets. As MarketWatch notes, major Western chip stocks, including Micron, experienced a decline as China stole the financial spotlight. Investors around the world are now forced to evaluate the immediate prospect of a Chinese manufacturing breakthrough. If successful, such an advance could make China's domestic semiconductor industry significantly more competitive on the global stage. This market shift illustrates how rapidly capital is flowing into Chinese hardware, threatening the traditional dominance of established American and international semiconductor producers as Beijing pushes forward with its technological ambitions and memory production goals. The competitive threat posed by rapid Chinese industrial expansion extends far beyond just semiconductor manufacturing. While coverage of CXMT focuses heavily on technology trading, reporting from The Guardian highlights how executives across other critical sectors are reacting to China's momentum. For instance, the chief executive officer of FTSE 100 pharmaceutical giant AstraZeneca, Pascal Soriot, warned that Western drug makers risk being outpaced on innovation if they fail to operate at what he termed Chinese speed. Soriot cautioned that Western drug companies could suffer the same competitive fate as the traditional Western automotive industry, which has increasingly lost ground to swift Chinese rivals. What financial coverage collectively underplays is the sheer scale of structural government backing and capital deployment required to achieve these market valuations. While media reports focus heavily on raw stock percentage jumps and daily market movements, a smart reader must look at the broader context of industrial survival. The massive market surge is not merely a reflection of retail investor enthusiasm or artificial intelligence hype. It represents a deep financial cushion designed to insulate domestic supply chains. By raising billions in local currency, CXMT secures the capital needed to survive severe external pressures and build out domestic memory infrastructure, despite trade friction. Ultimately, CXMT's record Shanghai listing marks a profound turning point for global high-tech manufacturing. By transforming a Hefei-based memory producer into China's most valuable public firm virtually overnight, domestic markets have delivered an unprecedented capital injection into local DRAM production. As Western chip stocks like Micron adjust to this new reality, global investors must accept that China's semiconductor ecosystem is rapidly gaining the resources required for a long-term competitive standoff. The massive valuation proves that despite global tensions, capital will continue flowing toward domestic technological self-reliance, reshaping the balance of power across the entire global memory chip industry.